We're about to go.
Perfect. I think we're just getting some lighting fixed here. But I'm super happy to go ahead and get started while Sam gets that sorted out. So hello, everybody. Welcome to today's Tech Talk, hosted by Modern Treasury on multi-rail money movement and how stablecoins fit into that. My name is Matt. I manage our payment products here at Modern Treasury, and I'll be your host today. Super excited that I have joining me today my two favorite colleagues in the world, and they're here to nerd out on payments with me. Dan Motais, our head of Beam, and then obviously we have Sam as well, Sam Aarons, our CTO co-founder. Great to have both of you here. Now, we're going to get into money movement. We're going to talk a little about it. But first, before we get started, we have a few housekeeping items. The first one is that today's session will be recorded, and we'll be sharing that afterwards. The second is that this is meant to be an interactive session. We're here to nerd out. So if you have a question, click the chat button in the right hand of the screen, and we'll try to go through all the questions and answer those. If we do run out of time, no worries. We'll take the opportunity to follow up after the session and answer your question. Cool. All right. Before we jump into the technical stuff, one of my favorite traditions here at Modern Treasury is food hot takes. So before we jump right in, I want to start off with some food hot takes from the team. They're meant to be deliberately controversial. So if you disagree, no offense taken. But we've had a lot of them, whether a hot dog is a sandwich or isn't a sandwich. So I'm going to start first. The one for me, this is sort of a Southern take, is mac and cheese is better when you add barbecue sauce. I'm going to pass it over to Dan. What do you have, Dan?
My food hot take, and first of all, hello everybody. My name's Dan, and excited to have a chat with y'all. My food hot take is that hummus is a completely viable, exhaustive meal, and I would eat hummus all day, every day if I could, and I think I'd be just fine.
Nice. Do you have a favorite kind of hummus?
I will take anything. The more authentic, the better. Obviously, though, no store-bought stuff. You got to get it from the real Mediterranean places.
There you go. Sam, what do you got?
I think olives are terrible, and they should not be included in any food, and should not be topped. They should not be toppings for anything. Olives are some of the worst food imaginable. That's my hot take.
The opposite side of the Mediterranean commentary.
Coming in hot. All right. I love it. Let's go ahead and get started. I mean, I think we could sit here and talk about food hot takes for an hour, but I know we want to talk about money movement and stablecoins. So let's go ahead and jump in. Over the past 50 years, payment infrastructure has largely remained unchanged. You got ACH, we have wires, but that's shifting, and it's shifting rapidly. We're seeing today how the combination of API-first infrastructure, real-time rails, and the rise of stablecoins is creating a really once-in-a-generation opportunity to rebuild from the ground up how money moves on a global scale. Sam, I want to start with you. We're seeing an explosion of new rails, new opportunities. So obviously you have RTP, FedNow. We have all of these new ways to use stablecoins in payments, cross-border payments via API, and companies are trying to stitch them together into a coherent story. From your vantage point, why has this multi-rail architecture suddenly become such a priority for engineering teams?
That's a really good question. It's interesting how you phrase it, because you're saying all these names, but you're also not saying, oh, and this rail is going away completely, and this other rail is going away completely. So it truly is an accumulation. We're seeing rails constantly come up, spring up. Like in the past 5 years, we've seen RTP, FedNow, stablecoins, as you just mentioned, and they're all finding areas that they're really good at, but they are accumulating. It's not replacing a strict replacement of other rails. And so I think why it's suddenly becoming a priority for engineering teams is because there's a lot of options out there and you need to decide which option is right for you. And there's so many options that you could choose from because, like I said before, the other rails, they're not going away, they're not dying. And what's really interesting is that the newer rails all show this kind of new customer expectation of fast, instant, potentially global settlement, at least in the case of stable coins. And so we're seeing customers expect things that are instant. We're seeing customers expect things that are quick, fast, easy to use. And so you see that trend with the new rails that are coming on. And so that's a priority for engineering teams who want to tackle payments that are more in line with current consumer expectations rather than dealing with I'll say something like paper checks, which is a little bit of a weird esoteric rail. If you were building a business maybe 20 years ago, fintech 20, 25 years ago, maybe paper checks was a huge part of that. If you haven't updated it until now, you would kind of wake up and see, hey, I think a lot of consumer expectations have changed and they want things to be instant. And that story isn't just a one-off example. There are a lot of companies where they say, okay, I'm building right now. I'm only going to build on a single rail and I'm going to ride out that rail. We see tons of companies that are built exclusively on ACH, and that's great. ACH is a fantastic system. But the problem is that there's a lot of shifting consumer expectations towards instant, where now they don't just want ACH. They want ACH and it's the and part that at least modern engineering teams are starting to figure out, okay, we need to add that, whether that's stablecoins, whether that's wires. And so it's really not choosing which rail you're going to move all your flow over. An all ACH product built 10 years ago is not going to go all FedNow tomorrow. The challenge really for these teams is to figure out, how can I use each rail individually at what it's best at? How can I be a product built on ACH and FedNow and stablecoins? And so we're seeing quite a bit of that coming up right now, and I think that's why it's becoming a priority for engineering teams at least at companies that move money as part of their product.
Super interesting. I'd be remiss if I didn't tie that back to some recent news we have. So as we talk about providing that sort of toolbox to be able to pick and choose to optimize, obviously here at Modern Treasury, we were lucky enough to link up with the Beam team recently via acquisition. I'd love to hear from you, Sam, how that allows us to architecturally expand and add stablecoin capabilities into our product.
Yeah. So I think maybe it's helpful first to start with Modern Treasury, the context behind the software sort of pre-Beam acquisition. So for the entire life of Modern Treasury, we started in summer 2018. So for the past 7 years, Modern Treasury has been a traditional, what I would call software layer on top of bank-to-bank payments. So what we do as a software platform, what we did as a software platform, is we allow companies who are moving money in their products to use our API, and then we figure out how to integrate with different banks, build APIs to make and abstract away the complexities of ACH and wires and FedNow. And so we're very much and have been very much a software company. We build API layers on top of these banking systems. And for a lot of companies who were bringing their own banks to the Modern Treasury relationship, to the Modern Treasury software, we got really big doing that. I mean, we've moved over $400 billion through Modern Treasury. We connect to, I think, over 40 different banks. We have individual rails. We have hundreds of them. We do Swift wires. There's a lot of stuff that we do as a software platform, helping customers integrate with their banks. And I think what the really important thing with the Beam acquisition is that it lets Modern Treasury take all of that really great knowledge that we've developed around how to send payments from a software perspective and bring, I think, what was the missing piece for us, which is, hey, actually getting into the flow of funds, actually being able to let customers get started really quickly. And really key, and I think Dan will talk about this later, very much key is stablecoins and bringing in all that knowledge around stablecoins. I think Modern Treasury historically has just been focused on bank-to-bank rails, wire, ACH, FedNow, like the real big ones. We don't have a lot of crypto knowledge. In fact, I tell many people internally, I'm not a crypto person. I don't have a ton of crypto knowledge. I dabbled in it in 2012 very briefly just to gamble online, obviously a big use case for Bitcoin at the time. And I haven't touched it, and that's the extent of my crypto knowledge. And so I think a big part of this acquisition is bringing in that crypto knowledge, but also bringing in those stablecoin payment capabilities, as well as getting us into the flow fund. So together now in sort of this post-acquisition time, we are going to have a single API that moves money regardless of the rail. So it's fiat, it's crypto, whatever it is. Modern Treasury has built a abstract API to move value from A to B. And all you have to do as a consumer of modern treasury systems is tell us, okay, how do you want it to go? You want it to go over crypto? You want it to go over fiat? Great. We'll do all the machinery behind the scenes to make it work. But the primitives that we expose to are all the exact same modern treasury primitives that you know and love. And it's really about making any money flow, regardless of how it actually moves, as simple as a single API call. So once we get Beam fully integrated by early next year, we're going to have one simple API to do payments over any rail. We're going to have a unified ledger. Because we're getting the full funds, we're going to have a very consistent, exhaustive compliance system that'll help us make sure that we're very compliant with all of the latest regulations. And all underneath the hood will be multiple rails, including obviously stablecoins, which I'm super excited about.
Awesome. Yeah, I'm super excited as well. I think it's awesome joining up with Beam that we'll have the opportunity to offer this wide goodie bag of options available. And then obviously within that, it's going to be easier and faster than ever because they won't have to go out and get an FBO. They won't have to go out and connect to different partners. Like you said, it'll be all one API. Dan, I want to jump over and talk to you a little bit about that stablecoin side. For folks who don't really know the opportunity that stablecoins present, myself included, coming from the fiat side, or who are maybe a bit gun shy because of the volatility that crypto has seen over the years, can you help explain what businesses are doing with stablecoins and the opportunities they present?
Yeah, absolutely. I think as a starting point, it's been really interesting to watch over the last couple of years the decoupling of stablecoins from broader crypto as a kind of asset class and market structure. So historically, stablecoins were built out to facilitate, trading liquidity, i.e. you wanted to step down from Bitcoin into a more or less volatile asset. You could do so by swapping into a stablecoin without trading all the way back to $1, leaving your position on a blockchain, right? So that's kind of where things got started. And with time, stablecoins got adoption in decentralized finance as a trading tool broadly, I'd say. And in the past 18 months or so, that's really started to change. Such that even Visa and other kind of data providers are now basically indexing various blockchain data such that you can decouple trading activity in stablecoins and payments activity in stablecoins. And moreover, stablecoin growth is decoupling entirely from like Bitcoin price action or Ethereum price action, which is really fascinating. So it's definitely a transition that we're seeing right now live and kind of in effect. But I would say that there's kind of a modern form of crypto emerging in this thing called stablecoins, and there's now tooling such as what folks can get from Modern Treasury that will allow for you to use the kind of compliant stablecoin rails in a way that doesn't require you to interact with kind of other types of decentralized blockchain networks broadly. Secondly, I think on the use case bit, it's also been an evolution here. I think kind of the first use case that was popularized and has really seen tremendous adoption is using stablecoins to offer US dollar accounts to folks around the world, whether that be folks in places that have have volatile currencies and or are experiencing inflation, and or other reasons why they want to like store or save in dollars. So there's a lot of consumer platforms in Latin America, for example, that have been built out around dollar savings account for Latin American individuals, right? So that was kind of the starting place. And then I think beyond that, we've now seen a lot of use cases for basically the same thing for B2B use cases, i.e. I'm a merchant in Argentina, for example. I would prefer to have a dollar account, and I can get that through a stablecoin platform more easily than I could through a traditional financial services platform. So kind of use cases similar, but kind of different go-to-market vector and different kind of problem that they're solving. On the back of that, I think a lot of the innovation that has been happening, especially in the past 12 months or so, and it's talked about pretty frequently, but I'd be remiss if I didn't mention it, is the usage of stablecoins to accelerate, number one, cross-border payments, and then number two, kind of I'd say cross-border liquidity management broadly, like kind of a 24/7 next generation treasury capability, such that if you match kind of current FX capabilities that a bank could offer, and allow for stablecoins to be used to facilitate money transfer from bank account A in country A over to bank account B in country B, there's ways through which you can realize efficiencies that are impossible if you're using a Swift wire as the money movement mechanism. And so early days there, obviously a ton of infrastructure still to be built out around the world, but as it relates to what we're seeing in the United States and as it relates to what modern treasury is doing, that's definitely a use case that we are excited about. I think the last one I'd say is, and this is probably the most, experimental still, is the fact that stablecoins are a possible alternative to traditional payment card acceptance for merchants. And so obviously, there's a lot of work to be done to build out, a complementary payment acceptance stack using stablecoins as not only the payment tool, but also the settlement tool, which will require, incremental tooling and logic and rule sets to be built out on both kind of parts of that value chain. But it is interesting and compelling to watch what could be done in the next 10 years, really, with this novel form of payment tool and settlement mechanism, both combined in the same format. So I guess those are some interesting ones. I think I can stop there, Matt. If you want me to go into kind of other use cases we're seeing, let me know. I can speak to some kind of live customer examples or anything else that's interesting, but you tell me where to go next.
Yeah, of course. No, that's really fascinating to hear all the use cases. We're heading into the colder season now, but I think the stablecoin summer is as hot as ever right now. So for the audience, if you have any questions on specific use cases, definitely ask them. We'll be more than happy to dig into them later in more detail. But I'd love to jump back to Sam. This is a tech talk. We are tech nerds here. So I'd be a little bit remiss if I didn't ask you how you're thinking about this from a technical perspective, plug into this new ecosystem, and what's top of mind for you as we plug in Beam's orchestration to the modern treasury platform?
Yeah, I mean, there's a lot going on. Obviously, there's that, I'll say it again, I'm not a crypto person. So there's a lot of knowledge around how crypto works and how stablecoins work that I don't know, but the Beam team has excellent knowledge around. And so that's been like a great resource for us as we try to figure out how to integrate. I think there's a lot of things different. And then I think there are a lot of things that are the same. From a technical perspective, there's obviously a lot of differences. Like crypto is definitely a different beast. But if you kind of squint a little bit, it really is the same as most rails. I mean, there's a source, there's a destination, there's a certain amount of value. Sure, there's some limitations on how much information you can put in a payment. There are limitations on how you can send it. There are things like figuring out how to comply with the travel rule, because a lot of crypto transfers are international transfers. But it's not that dissimilar from working with wires or working with ACH, where, hey, you also have a really large rule book. I mean, if you look at the Ethereum white paper, at least the original white paper or the original Bitcoin white paper, they're long, but they're not that long. Whereas if I take the 2025 NACHA rules and regulations that I have on my desk right now, that's a 900-page book. And so there are a lot of rules and complexity to both systems that I think people underplay one and overplay another. They're all complex, and they all are complex in different ways. So it's a lot of the same. It's a lot of the things that are different. But Modern Treasury is a multi-rail company, at least under the hood. Technically, we support so many different rails that it's pretty easy, I think, so far to build in these things. It's those unknown unknowns that we keep running into and trying to understand. And they don't die. And so we're still going to have all these rails even going forward for quite a lot of time, on top of all the stablecoin stuff that we get through integrating Beam into our system. I think the biggest difference, though, is that this acquisition will let us sort of allow customers to very quickly open up accounts with our sponsor bank and to be able to actually use all these rails much more quickly. Right now, our traditional model has very much been, hey, bring your own bank, bring your own connection. But I think in the stablecoin world, a lot of people, they want to get started quickly. They don't necessarily have a large relationship with a large kind of large bank, large commercial bank at least. And so I think using modern treasury to help them facilitate payments, that's something that we're learning a lot as we go. But from a technical perspective, the fun part is we're just building on top of modern treasury. We're using modern treasury the way a customer would, building on top of ourselves, and that's giving us quite a lot of speed up as we integrate.
Sam, can I just cut in there with one kind
Absolutely.
of additional call out that I think is relevant? And I would harken back to the kind of comment that I made on a large portion of crypto infrastructure that's been being built out for trading use cases, right? And so to date, a lot of investment has been poured into that. A lot of money has been made in that, but there's still a lot of room to create technology that is kind of applies payments first principles to stablecoins and to blockchain rails, right? And that's not to say that hasn't been started, but there's still a lot of room for improvement and evolution there. And so I think one of the parts that excites me about what we're all doing now here is we can take kind of modern treasury's first principles approach to payments and then almost bend stablecoin systems to our will, where again, like a lot of the complexity is basically abstracted and hidden away. And there's a lot of basically bells and whistles of blockchains that are unnecessary and not necessarily like visible to the users of these rail sets. And so under the hood, what's needed to do that is obviously complicated, but ultimately the idea is that we stitch it all together such that folks that build on top of modern treasury can have a future-proof system that removes the need for them to actually interact with like crypto native infrastructure, basically. And as such, they can interact instead with payments infrastructure like modern treasury.
Yeah, I think I totally agree. I mean, that is really the goal of this is we want to make all of this abstract. Like, you shouldn't know that you're dealing with these systems. You should just say, I have money here. I want it to be there and just have a system take care of it all for you. And that I think is really what we're going for right now is that really kind of abstract API that does this. You bring up something interesting, Dan, which I want to touch on a little bit, which is in this space currently, there are a lot of, how would I put this? Crypto native or crypto only solutions. And there's a lot of fiat native or fiat only solutions. And they start in their respective industries and they kind of stay there. And you see this in payment software. You also see this in things, without naming names, in compliance software, where there's some amazing crypto only compliance software. There's some amazing fiat only compliance software. But you don't really see someone doing both. And in the payment space, you also don't see someone doing both. And I think that's the kind of void that modern treasury wants to fill is, hey, we want to treat all of this as a first class concept and not as a bolt on. And we want everyone to think about stablecoins in the same breath as they think about ACH and wire. And we want to make it equally easy to use all three of these through a single system. And we're really trying to unify. You can think of it as sort of the grand unified theory of payments. We're really trying to unify all of these systems under one API. And it is difficult. And I understand maybe why no one has done it before. But I think there's going to be a lot of rewards for people who actually can just do all the rails through a single system. And that's what I'm hoping to provide to our customers. And early next year, I'm really excited to launch kind of the integrated modern treasury and Beam product because I think we're very close.
For sure. I can personally speak to how awesome it's been to work on melding these two together and sort of having fiat and crypto sit side by side and work together hand in hand to build, optimal payment experiences that you, the builders, can take and go build better experiences for your users. So, Dan, I have one more final question for you before we jump into all the Q&A that's coming up. How should the teams in the audience be evaluating multi-rail strategies as they look to blend everything together? What are the big decisions and big considerations they should make in terms of choosing what to plug into and how to orchestrate it?
Yeah, I think like anything, the first thing I'd start with is what is your kind of customer need? What value prop are you trying to build for? I think one thing about both me personally, and I also think that about what Modern Treasury is building here is that, again, we're kind of agnostic to rail so long as you choose the rail that works well for your job, for the job to be accomplished. And for example, there could be a domestic use case that needs RTP and for which stablecoins are unnecessary, right? And so from a first principles perspective, I think it's important to kind of critically evaluate what rail can do the job first. And in the event that is a stablecoin, and for which there are many use cases, you can kind of use that as a kind of way through which you guide the discussion. But that said, I wanted to preface things with like stablecoins aren't for everything, right? They're not this panacea in payments. However, as it relates to stablecoins and what they can do, I would say what we're seeing a lot is like it's okay to start small. I think interestingly, a lot of folks are beginning to kind of come to us now and have historically come to Beam and said, "Hey, I'm actually unsure about what this can do for my customer flows, but maybe there's an internal corporate treasury flow that I could use stablecoins for. Could we start there?" And I think that's a really compelling place to start, especially as the entire ecosystem across compliance, risk, legal, et cetera, is getting educated about how to appropriately use this tooling. Is that starting small is fine, and it's a good place to start, such that everyone and all of us can learn together before you expose this tooling to your customers. And hopefully for all of us, that's done over the next 12 to 18 months. But I think that's a completely fine starting point and is one that I'd recommend. And we see a lot of questions around right now. I think the other one that I think a lot around is basically like as a developer or builder or whoever could be building on top of the modern treasury platform, what is your kind of desire to be at the very low level, kind of like consumption of all composable primitives, or to what extent would you prefer that modern treasury orchestrates things for you, and you would prefer to just select, okay, just send a payment as fast and as cheap as possible, right? And so I think that's an emerging kind of school of thought that we at modern treasury are kind of frequently debating. Is kind of like, there's demand for both sides, right? And we want to be a tool for both sides. But I think ultimately, like as a possible person evaluating modern treasury, that should be a question that you evaluate for yourself before you kind of pick a lane, because obviously things are changeable down the line, but kind of deciding up front how low level you want to go is an interesting design decision that, of course, the modern treasury platform can accommodate on both sides. And then I think there's some softer ones, like, if you're looking at the life cycle of a payment, either on the fiat side or the stablecoin side, to what extent do you care about end-to-end payment visibility as a part of your workflows? Or is it more of a set it and forget it type of model? To what extent do you kind of want to use ancillary products and services around the actual payment order to enrich the payment workflows that you're building on top of? And I think that's important, because a lot of the value add in payments broadly is what workflows you're creating for your particular customer niche. And there's a whole host of different tools and services on each individual rail that you can use as a part of your arsenal. But I think it's important to kind of think through the configuration of that as you're building, because again, everything can be changed, but upfront design decisions matter in that regard. And I think to bring it back to stablecoins, there's a lot of really cool stuff on stablecoins that can be done as it relates to transaction visibility that is increasingly possible on RTP and FitNow, for example, but historically with rails like ACH has been a little trickier. So I think the overall modernization of payments and what stablecoins represent as another rail, as juxtaposed to other new rails that have emerged, is really exciting. And I think broadly, like if you think about this whole new thing as a kind of a new platform or paradigm for payments, it's going to be really cool to see what people build on top of modern payments broadly, right?
For sure. I think that's fascinating. And I'm curious, when you were coming into the stablecoin space on your end, what was that first use case for you? What was the one that caught your eye and where you dipped your toes in the water before you fully dived in?
So this one came from work experience. So prior to starting Beam, I worked at Visa for a long time and spent most of my time kind of thinking through and building products that allowed for Visa to move money through alternative mechanisms. So at the time, we had purchased a small company out of the UK that basically let Visa begin to bridge into local clearing systems such as FPS in the UK, UPI in India, FAST in Singapore. And we were working through a model that would allow for Visa's broader kind of treasuries and settlement system to speak to and settle with this new asset that Visa had purchased. And it was very difficult because ultimately it was reliant on kind of older school plumbing. And at the end of the day, international wires, right, to rebalance liquidity across various accounts around the world. Assuming that this was a very much like a set up an FBO and kind of build out a hub and spokes aggregation of FBOs around the world to deliver, basically value transfer. And anyway, this was kind of at the time where there had been kind of USDT as the stable coin that was rising to prominence for a lot of different use cases. USDC had really started to come onto the scene. And I think from my experience at Visa, it was frankly a little bit easier to communicate why USDC could be relevant to Visa's risk and compliance teams. And frankly, that's where it kind of snowballed. So at the time, I was on a more traditional product team, and then I joined the crypto product team to oversee settlement capabilities that could use stablecoins. And so since then, Visa's actually launched some of that stuff, which is awesome. Really excited to see. But an example, like USDC payouts as a complement to Visa Direct was an interesting one that they've been working through. So assume you're a marketplace, you could use push to card, you could use payout to bank account for a lot of different markets. But what if you were a marketplace that serviced a less developed kind of like seller ecosystem? How could you use stablecoins to deliver value to that seller that's selling goods on a global marketplace, but it doesn't have the kind of infrastructure in their domestic marketplace to receive their the earnings really easily, and then spend those earnings and save those earnings and do something with those earnings. So that was an interesting one. And there has been movement on that one very recently, I think in the past couple of weeks even. And then I think the other broad one, and I'm really nerding out here, but the one that I'm personally obsessed with is what if the card networks could use stablecoins to dramatically improve how settlement works for the card networks? And what does tokenization of currencies look like in a world where basically like all of Visa's various FX pairs could be executed and traded and rebalanced around the world using digital currencies instead of kind of traditional currencies? And obviously that kind of core plumbing question will take a long time to work through, but I'm personally like very fascinated with that use case as a way through which Visa can really lean in on what's happening here to kind of future-proof their business model a little bit. But yeah, ultimately decided it would also be fun to go build myself, and then ended up here.
And I don't want to jump the gun too much, Dan, but I know we're going to get into questions soon. I do, because I can see some of the questions coming in at least a little bit. I think there are going to be questions about cards in general, like not just for how stablecoins can help solve the settlement layers behind the scenes at places like Visa and MasterCard. But I think I'm seeing some questions here coming in, which we'll get to, about do cards need to exist at all, which I think will be kind of an interesting discussion topic, because that's something I think there's a question mark in the industry is, can we use these for consumer payments?
For sure. That's a really good point, Sam. And on your end, are there any specific use cases that stand out to you, or is your vision and where you're most excited aligned with the examples Dan shared?
I think I'm aligned with Dan on those examples. I think as a settlement mechanism, stablecoins represent a completely, I don't want to say unique, but generally a very good solution to a very real problem. How do you move money across the globe 24/7, 365? I think stablecoins present a really good advantage in that arena. Without revealing myself too much about the questions that are about to be asked, I am more skeptical about stablecoins being used as a payment, consumer to consumer payment or consumer to business payment. But that changes when you look at it from a different perspective, from a business paying out a consumer or a business paying out another business. I think there are a lot, especially when it's dealing with the international, when it's like across two different locales. I do think there's a huge advantage there, and I'm very excited for how stablecoins can potentially change that.
Cool to hear. Well, I do want to jump into those Q&As now, so we have time to answer everybody's question. Just a small note as well, we're going to launch a little bit of polling here to get your feedback, and we can talk about that later. But I want to jump in first with a question from Scott, who's joining us from Stronger Works. He's asking about use cases on the, sorry, lost it there for a second. The use cases that Sam and Dan, you're seeing on the issuing side of the house as opposed to the acquiring side, and how they can be integrated into card issuing or payment issuing more broadly in a way that actually, adds value as opposed to just replaces what's already there. Can they replace interchange and card rails outright, or are they there to more supplement and unlock specific use cases?
Who do you want to go first?
You can go first, Dan, if you have something.
It's all you. Go ahead.
I will. What I'll say is this: I'm actively watching the poll results because this kind of informs my answer, which is I'm seeing as of right now about 20% yes, 80% no for have you ever paid for something with crypto or stablecoins. I think it's because the usability of crypto and stablecoins right now is, to be frank, terrible. It is not a good experience for a consumer who's so used to being able to go up to a place, physically swipe a card or tap their phone. It is at least 10 clicks and 30 seconds of waiting to use crypto at least in an in-person commerce scenario. In an e-commerce scenario, maybe it's a little bit easier. But I don't see, how would I put this? I don't see stablecoins really replacing interchange, really replacing cards. I do think there are some capabilities that it can be replaced, and I think there are some places where it can be replaced. But cards are fundamentally kind of a different structure. And I think the one example that I always think about is checking into a hotel. When you're checking into a hotel, you put down a card because obviously you need to pay for the hotel stay, but you're also putting down your card because you're putting up some agreed upon form of collateral, right? If something happens to the room, if you don't check out on time, if you check out too early, if there's a problem, the hotel has some, collateral or some backup in the sense that, okay, I can charge the card, I'm allowed to do that. And so you're sort of putting up some credit, I guess, against the hotel in a way that where stable coins are very, one-off, finite. The money's in your account. It's instant. It's sort of difficult to kind of bridge that trust gap somewhere. Would you let someone check into a hotel purely based on stable coins unless they kind of overfunded and expected to be refunded? It's kind of a different thing. So I'll say no. That'll be my take here for this question. I don't really see stablecoins replacing cards, but I do see a lot of use cases. It's just it's really hard to train consumers out of it.
Dan,
Yeah.
On the opposing side.
I don't know if I can take the fully opposing side. So I guess an interesting analog that I think through is pay by bank is newer in the US. We're still seeing as to kind of if that takes off. There's been some interesting stuff with pay by bank at Uber, for example, that's been rolled out. I actually don't know kind of adoption wise what that looks like, but I guess my point is like changing consumer behavior is hard. There are reasons why consumers pay with cards. Some of it's the mechanics of what Sam explained. A lot of it's the rewards. And to change that would be hard. And if pay by bank works, my thought's always been maybe like an enhancement to pay by bank could be a pay with stablecoin user experience that functionally under the hood would work a little bit differently. But I guess the point being, like, if you could change the user behavior with that, you could potentially change the user behavior such that they adopt a stablecoin based payment solution. And I also think there's really important distinctions between like face-to-face and e-com here that are they're kind of just like whole different beasts, and the user behavior is different. The fraud vectors are different. The tooling is different. The platforms that have been built out to enable it are different. And so I guess I'd say like maybe for use cases, and I would probably stop there. I have not yet kind of seen like a consumer to merchant pay with stablecoin based world take off yet from anything that I've seen thus far. This concept of like, does interchange exist in the future is one I've spent a lot of time thinking about. My take is interchange is beautifully designed. It's a really, really beautiful balance, and the incentive mechanisms that gets consumer and merchants to align on using this thing to pay is pretty fascinating that it works. There are questions about how the proportional like allocation of the benefits could skew differently. Like right now, merchants have to pay a lot to accept cards, and there's a lot of reasons why they do that. But could that change? Maybe. I'm just gonna it's a hot take. I'm gonna put it out there. I can't address it head on, but maybe somebody will hear this and run with it. But like, what if interchange existed on blockchain, and could you more evenly spread out the incentives of how the card networks currently work by recreating interchange and or enhancing it or creating like a V2 of interchange on a blockchain is like a really fascinating thought experiment. And I'm just going to leave it there. Like maybe somebody will run with it, but I really think that's a fun one.
Just one more thing, because I'm noticing the first part of Scott's question was also on the issue inside of the house, and we sort of jumped into the can they replace cards outright. On the issuing side, I think the one thing, just to answer Scott's question directly, the one thing I've seen that's super interesting is that there are companies now that are issuing cards that are backed by crypto and backed by stablecoins. And there's a company that does this that the three of us are really familiar with and really like that does this. And I think that is a really interesting opportunity where you already have a global network called Visa or a global network called MasterCard. And instead of having someone deal with the idea, I'm taking Dan's language away from him. He's the one who kind of put me onto this. Instead of using stablecoins when you're going into a foreign country, why not just use a card that you know how to use that's on your phone that you can just tap, and then behind the scenes, whoever the card issuer is taking the crypto, converting it, making sure that Visa or MasterCard are funded, and then paying for that purchase all within the span of you tapping your phone. I think there's some really interesting issuing cases for issuing cards backed by stables. And then if you extend that into geographies that are slightly harder to reach with traditional bank-to-bank rails like India and China, I think there's some opportunities there as well where to ride on the coattails of those networks who have, UnionPay, who have deeply penetrated into those markets. And you might be able to say, okay, how can I use this to also facilitate crypto transfers behind the scenes?
I think one other point I'd add to that one, because I too I'm a big fan of that use case, and I think the growth is impressive, and it's definitely worth paying attention to. I think it was Andreessen Horowitz that coined the term like global by default fintech, right? And the future platforms will be global by default, and therefore fintech must adapt to accommodate that, right? Stitching together global by default fintech infrastructure is hard. It's really expensive. You have to stitch together a bunch of FBOs. It's worth fighting the good fight. But the interesting thing about stablecoins is that they are kind of a global by default product and or platform on top of which these global by default marketplaces or consumer apps or who knows what else will be cooked up in the next 10 years can build kind of to future-proof their underlying financial plumbing. And like we want to play a very large part in enabling folks like that. And there, again, it takes very sophisticated infrastructure to basically like get value into a stable coin such that the global by default nature of stablecoins on a blockchain can actually be availed. But once that's done, it's really, really fascinating. And I guess I mentioned that because you kind of have this concept of like a global issuer processor by default with this concept of stablecoin linked cards. And I think that's an interesting and kind of compelling angle. And I think, it's personally one I'm super interested in.
No, fascinating. I want to sort of change gears here a little bit. We've talked about the ergonomics and the user experiences we can create leveraging stablecoins and blending that with cards and account-to-account payments. I want to shift to the risk side of the house. As we've mentioned before, stablecoins are a form of crypto. Sometimes that word can have some interesting connotations. So I want to jump onto a question from Jaya, who's asking about how we should think about the risk of holding stablecoins as opposed to holding fiat funds in a traditional account. And what are the key safeguards that need to be in place to help ensure stablecoins are handled in a safe, reliable, and well-regulated manner? Dan, I want to send that one to you first.
Yeah, so I think there's a ton of stuff that goes into this, right? I think Sam made a comment that there's a bunch of kind of awesome fiat infrastructure that's been built up around compliance and risk management. There's a bunch of awesome, compliance and risk infrastructure that's been built out on top of the blockchain side of things. And I think there's still an opportunity to unify both of those. I think platforms that are building up this convergent layer need to do a good job of kind of taking models that apply on fiat land and applying them to stablecoins while also advocating for the distinct uniqueness of stablecoins in a way that ensures that we don't kind of like achieve some like lowest common denominator issue where like we're inheriting kind of stuff that existed for fiat that doesn't need to apply to stablecoins. And so it's kind of like it's both philosophical and like product strategy question there that I think the industry needs to be careful about. Otherwise, again, we'll inherit some probably baggage from how fiat money movement works. But moreover, there's great stuff on the fiat side that we need to accommodate. Like travel rule compliance is like, by default needs to be included in cross-border payments right now. As an example, and that's something that people have built out platforms around to enable. I think broadly, like the way that I think about it personally, and I think some of the ways that modern treasury is building the system right now is like there's kind of like compliance and onboarding, and there's ongoing risk monitoring, basically. And there's all types of reasons and all types of stuff that you check when you're onboarding a customer. There's information that you need to collect. There's screening checks that you need to do. There's stuff that you can do up front, and then there's a bunch more stuff that you need to do on an ongoing basis, and that applies to both the customers on your platform and the transactions that they send through the platform. And compliance is a kind of dynamic, organic beast. You need to constantly be reevaluating new risk vectors to payment flow that's coming through your system. And stablecoins do represent unique opportunities for more risk to be introduced to financial systems. And so I would just say, like, it requires investment. We are investing heavily in that at Modern Treasury. I think the platforms that make it and scale and kind of last here will also invest in compliance, because it's necessary to kind of ensure that the tooling and the ultimate stuff that can be created here is done so in a safe way that doesn't get folks in trouble.
Interesting.
I just want to add to that a little bit on the risk side. The other risk we didn't talk about is the fact that there's counterparty risk somewhat involved in holding a stable coin, right? You're holding a stable coin. If it's Sam's cool stable coin, you don't know how trustworthy that is necessarily, because you have to understand, like, okay, is there a dollar backing it? I think the Genius Act has put out a lot of really great guidance and has created this great, legal pathway for a lot of these stable coins to feel very risk-free and secure and be able to hold them. And so I think there's that counterparty risk part, which is something that people have to think about. Think about Genius Act compliant ones. Think about ones where you really trust the counterparty. The other risk vector I want to talk about is just holding currencies in general. I don't think we do with this enough, where we keep talking about stable coins, and that's great, and I like using that term, but I think another term that you could use it is, it's just a different currency. I mean, it's happened to be pegged to the dollar, but it's like holding euros or holding British pounds. Like, what's the risk of holding those currencies? I mean, the value could fluctuate, it could change. It depends on, okay, do I have enough euros when I need to use them? And all those same risk calculuses apply to holding stablecoins, which is, am I holding enough in proportion to how many dollars I'm holding? Am I holding the right amount overnight when I can't maybe have a lot of liquidity from USD into a stablecoin? And then can I send it right away if I do need to cash out? Like, these are all risk calculuses that people take when dealing with foreign currencies in general. And so there is a somewhat standardized playbook you can look at too for applying that to stablecoins. And then there's, of course, all the technical risk that Dan talked about that is new or unique to stablecoins as a risk vector.
Super interesting. I want to loop back on one point you mentioned there around regulation. I'm curious if you have any thoughts on how the companies that are innovating in this space can better collaborate with regulators to put these safeguards in place and to make sure that there's a coherent vision for buildings, in a way that's smarter, in a way that doesn't carry over some of that baggage, Dan, as you mentioned, from the fiat space. Do you have any thoughts there in terms of how companies can collaborate with regulators to build a better and safer future for stablecoins?
I would just say more conversation is good. I think over the past 12 months, especially 12 to 18, really, there's been a lot more conversation. Conversations are fruitful. There's progress that's been made in terms of kind of defining rule sets, like hence the fact that we can even speak to the Genius Act as an example, right? And I think a lot of builders are spending time in Capitol Hill chatting with people across the board, whether that be at various agencies, whether that be at various Fed branches, whether that be at various kind of forms of government. So I'd say, like, I think the conversation, like the trend line is positive right now, and I think that needs to continue. I'd say, depending on kind of where folks sit in the ecosystem, what their role may be, I think more feedback's better. I think one of the things that we're excited to do is kind of like build out more of like an internal stance on some of this stuff, and with time also be representatives of this technology on with various folks. And I don't know, like, after joining the Modern Treasury team, I know Sam spends a bunch of time with various folks from the Fed all the time. And I guess, like, not to show MT too hard, but we can be an ally on that front. And given the fact that we're kind of payments nerds ourselves and we think about this probably too much, we can, advocate for the voice of the customer and hopefully help kind of guide things in a way that, to your point, like, allows for these systems to thrive and kind of add value to consumers and merchants at the end of the day, which is what we're ultimately trying to do.
Super interesting. Sam, anything on your end?
I'll just say that the crypto of a decade ago, of 10 years ago, is maybe infamous for skirting regulations, skirting compliance. But I really want to kind of stress to the audience that's not the case today. I mean, obviously, modern treasury is very focused on compliance, very focused on making sure we follow the rules. There's a lot of players in this space that are making sure that we're very focused on compliance. Like, there is obviously a kind of Wild West mythology to crypto and all these things, but there really is a solid use case here that can be used in actual B2B, B2C payment flows. And we want to lean into that. We want to be the most compliant platform, because that's a big part of how we think we'll grow really quickly, is by following every rule and making it really simple to get spun up really quickly, and by handling all of these rules and regulations automatically with software. That's, I think, our competitive edge here, is we want to tackle this in an automatic way and make it so that everyone in the value chain, including the government, including regulators, are fully informed on what's happening.
Super interesting to hear. And yeah, I know, Sam, you have a constant line of communication with the Fed, so we're always happy to sit down and chat. I want to jump into, for the people here who are starting to think, okay, I want to test out, I want to experiment. What does the implementation timeline look like? What do you need to think about in terms of how long it'll take, what resources you need if you're trying to get stood up, both from the fiat side, if you want to get up and running without having to go through the process of opening your own FBO, but as well if you want to open and launch, obviously compliant stablecoin products and payment services to your customer. What does that implementation look like, Sam?
Today, without modern treasury?
Today without modern treasury, and if you want to sprinkle in a little bit about how we can help out, feel free.
It's a lot of work. I mean, that's the first thing I'll say, is there's a ton of work involved. I mean, just from a pure, as CTO, as an engineer myself, just to think about the engineering challenges involved in doing all of this, it's a tremendous amount of work. To say nothing of the partnerships that you have to build individually with banks, the partnerships that you have to build with compliance vendors, all the software that you have to stand up. I mean, this is not an easy process. Like, if you are starting a business, as you described, Matt, like of what they're doing, if you try to do all that today, I mean, without something like modern treasury, or just building it all yourself, I mean, that's a year plus of work. I mean, the engineering work is really the long tail there. The work to actually find a bank, bring a bank connection, build all that integration. I mean, the payments side of that alone, the payment software of that alone, is at least 6 months. And that's someone who's maybe done it before, but 6 months is quick. If you have someone who's done it before, you're looking at closer to a year. So I think a big part of, without trying to delve too much into the product and the offering, I'll say at a very high level, modern treasury wants to make it really easy, because we've spent the past 7 years looking at payments, looking at how to optimize, looking at how to integrate with banks more quickly. And so we want to make it a very easy solution where you sign up, you submit some compliance information, you get an account open, you can start issuing payments really quickly. I mean, is it within 10 minutes? No. Is it within a couple of days? Yes. Like that's the goal, really, is to have you started in days or a week, not have you started within 6 months to a year. But that is the timeline that you're looking at today, because there's so much going on and so much orchestration. And then to say nothing of the things we started off this conversation with around all the rails that you do have to implement. Because again, the consumer expectation, the business expectation is that you can support every rail. And so there's a ton of work involved in that build out.
For sure. I can speak firsthand to that in terms of how much work it is, even just getting one bank or one partner on the crypto side stood up, let alone, one for every market, one for every use case. I want to talk a little bit about how that fits into Todd's question. So Todd is looking to offer payment facilitation as a service for credit card processing. But then, as we've discussed, he wants to go multi-rail. He wants to build out a coherent experience and blend stablecoins and fiat together with ACH, FedNow, stablecoins. What does that look like? What are the ergonomics? How can he plug into modern treasury and build that experience in, days and weeks, not months or years?
Yeah, I mean that's the product that we're building, Todd, and we'll have that launched early next year. And a big part of the product is essentially allowing platforms such as yours to do all of that, to be able to open up accounts, to be able to send all these fiat payments and crypto payments, and have that work under a single API and a single platform and a single system. And that's on top of our existing payment software, where if you have a bank that you also want to plug into and initiate payments out of that bank, you can bring that and combine that with sort of the managed offering that Modern Treasury brings. So for platforms, marketplaces, apps, companies who are basically taking money in on the left hand, giving it out on the right hand, there aren't that many options, and there are no options that blend fiat and stablecoins together. And that's what Modern Treasury is launching, and that's what we're getting into, is this seamless sort of platform facilitator of payments across multiple rails.
It's exciting to hear, and it's been fun the last few months to work with the two of you in terms of building that out and plugging, the stablecoin side and the fiat side into the one single API for payment orders on Modern Treasury. Perfect. So before we close out, Sam, Dan, are there any parting words you want to share with the audience on multi-rail money movement, on stablecoins, what you're thinking about over the next couple of months? Dan, on your end?
Yeah, I think I'd just bring it back to the point, small is okay, where we'd love to chat if you're interested, want to learn more. I think obviously it's newer, and like the most fun part, at least in this, the most fun part about kind of building where we are in the infrastructure layer, but especially on the stablecoin side from a personal perspective, is just talking with folks who are building cool stuff. And we'd love to support and kind of help you think through different things that are a little bit tricky as you're building and as you're scaling. I really like this concept that I'm going to take from Sam, called the kind of this forever payments platform concept, where it'd be cool if it'd be great, and we would very much encourage for folks on the line right now to come to us kind of on day one as you're kind of concocting your business idea, and ideally the Modern Treasury is developing services that can stay with you through however long you're running the business from a payments perspective. And I think I personally get a lot out of like early stage builders and working with folks that are at the cutting edge. And I'm really, really excited by what brains beyond mine can concoct in the next 10 years on new rails. And so I think that's like the parting thought I guess I'd run with, is like, excited to think creatively with folks and kind of rebuild new workflows that were never possible before these kind of new rail sets came to market.
Perfect. Sam?
I think the one thing, and we have touched on it a little bit, but I think this is my closing thought here, is expectations are changing, and by all accounts have already changed. Consumers and businesses want payments instant, 24/7, 365, and they want it cheap. They don't want slow and expensive. They want fast, cheap, and instant. And stablecoins represents a really great opportunity there to offer that to your users. But let's not forget the other instant payment rails like FedNow and RTP. That's kind of that's my personal thing, but that's also kind of a Modern Treasury perspective, is instant payments are eating the world. And it doesn't matter what the instant payment rail is. The fact is instant payments are things consumers want. It's on the rise. Businesses want it. And so to encourage the audience here is think about what your instant payment story is. And whether that's, doing FedNow, doing stablecoins, doing both. Obviously, Modern Treasury has a product to sell you and a product to offer you if that's the case. But just think about what is your own instant payment story, because that is where the world is going. People, your counterparts, are going to be expecting instant payments from you in the future, or you're going to be expecting instant payments from them. If it's one thought to leave here, it's just think about how you're going to integrate instant payments into your business and make sure you have a plan and a strategy. And if you don't, definitely come talk to us, because we have a lot of thoughts and we have ways that we can make that a lot easier for you.
Perfect. Thanks. I think I personally could go on for about another hour about RFP, but I won't subject everybody to that. So I just want to close out by saying thank you again to everybody for joining us today, and a huge thank you to Sam and Dan for sharing your thoughts on multi-rail money movement. If we didn't answer your question live, I do apologize. We'll make sure to follow up after the fact and give you some insights. Otherwise, if you're interested in exploring, multi-rail flow of funds, experimenting, as Dan said, from day one, whether it's on stablecoin payouts, instant rails, ACH, or just getting live without an FBO account and figuring out what the right components are, you can sign up with us for early access on the new product we're launching. So after this session, we're going to share the recording link. And as part of that, we're going to include a link for you to sign up for early access. That'll go out in the next day or so via email. So make sure to keep an eye out for that. And once again, thank you so much for joining and entertaining us and entertaining our thoughts for the last hour.
Thank you, everybody.
Yeah, thank you.